Hello traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for March 31st, 2019. Hope you guys and gals are having a great weekend. Now, before we get started on the analysis and what we're looking for going into this next week and kind of what had happened last week, which is a lot, by the way. If you haven't tried out ForexAnalytix, do so. It's $1 for 10 days. All you got to do is click this little button right here in the middle where it says sign up today. And once you do that, make sure you download our mobile app while you're trying out ForexAnalytix. You can get it from the App Store or Google Play Store and log in so you can have all of our analysis, our updates when these currency pairs that we follow or indices that we follow hit key levels that you're notified on your on your mobile device, even if you're not in front of your desktop computer. And make sure you take advantage of our community where we have a chat room with lots of different traders in there throughout the course of the day, usually about 100 of us. It's a private community and we're in there chatting all the time. So anyway, I'm going to I want to talk about this next week. Actually, I want to talk about some price action that we have here with the euro dollar as we approach pretty key support. Now let's take a look at the daily chart. You'll notice that we are really closing in on that 112 level, and this is a big week coming into this next week for a few different reasons. First of all, it is non-farm payroll week, so the dollar has the potential to break out of this very tight trading range, which means that the euro dollar, because we're closer to support than resistance, the risk of the euro dollar potentially breaking down is quite high. It's not just the jobs report, but we also have on Thursday the ECB monetary policy meeting minutes that are set to be released. Now, if you don't recall, some of the German data was extremely weak over the last 2 weeks, and as a result, we're going the market's going to start paying a little bit closer to attention to what the ECB is saying in their meeting minutes. So that has become a little bit of a market mover. It's kind of like the FOMC minutes now. Over this last year, we've seen some volatility arise from the release of those minutes. So that's going to be on Thursday. Then also keep in mind on Friday we have the jobs report. But if you look at the euro, remember we did have that false breakout above 114. Whenever you got a false breakout, it tends to lead to a breakdown. Actually, let me go over to the this chart here. This is my drawings on my charts, but we had the false breakdown here, led to a breakout. Then we have a false breakout that could possibly lead to, in my opinion, a breakdown. Something that looks more like something looks like this, and then we start making our way towards the 110. Now remember, of this last move, the 110 level is the 161% extension. It's the golden fib, and if we do break that, you'll notice that relative strength has been divergent. Let's zoom in a little bit here and let's take this RSI and let's do this. And remember, RSI has been divergent, but now that it's divergent and it's worked off a lot of those oversold conditions, if we did break down towards 110, all the RSI would do at this point is just drop down to very oversold levels, which we're not at right now. You notice how relative strength is not oversold and price is at support. So if price breaks down, RSI will break down and eventually hit oversold, but we'll break that divergent path that we've been on. That is a risk, in my opinion, this week. Now remember, we have been in such a tight trading range for so many months. You're talking since you go back to October here of last year. This maddening tight range that we've been in, and I say maddening because I know it's been for you and for me and for everybody else that's been in the FX market. A break and a sustained break, not a false break, but a sustained break. We get a day or two below 112, it's going to start to entice some selling, and then we could get some acceleration. I think a lot of people have been trying to fade the dollar index, and if you read the ForexAnalytix chart of the day, that's on our blog and it's free. Just this last week we talked about the bullish wedge that we have at the dollar index. We have consistent highs, higher lows, and we're approaching that 97, 97.80, 97.70, 97.80 key resistance. And the dollar may have one last hoopla to the upside, before we start seeing some selling. I mean, the dollar has been pretty much like the Teflon currency, and nothing sticks. Bad data, weak or more dovish Fed, doesn't matter. The dollar continues to rise, and with equities where they're at, we see any type of risk aversion, any whatsoever, the dollar is going to come back into play, I'm sure. So anyway, that's a quick look at the euro. I want to take a look at the cable. The cable has been, disappointing as somebody who's, was hoping to buy the cable and hoping that, we would finally get some sort of resolution on Brexit. Of course, I've been wanting to buy the cable. I think all of us have. Let's get a deal done, and then let's buy the cable. Unfortunately, it looks like things are going to get prolonged into April, and then we don't know if Prime Minister May is going to stick around. And the problem technically is the cable's taken out some pretty key support when we broke through this 131 level. So now the risk is starting to build that we get a move down to 128. Now, I'm not so concerned with the cable, the pound dollar. It's not something that I'm, other than some intraday scalping, and I might try to make 10 pips here, or 20 pips there. I haven't really been focusing so much on the pound itself. But there's some cross rates that I think you should look at this week. For example, let's take a look at the pound Aussie. Now, the reason why I want to talk about the pound Aussie is because the RBA does meet this week. Okay, so here's the pound Aussie. Now, let's go over to the daily chart here. And what you'll notice in the pound Aussie is we've been in this nice little, very, well-respected up channel. And what we've done is we've taken out 184, we've taken out the lower end of that channel, and now the risk is starting to build for a downside move. If you have an RBA, which is meeting, by the way, on, well, it's actually Tuesday morning in Australia, Monday evening if you're in the US, and obviously, I would say, Tuesday at midnight-ish if you're in Europe. But the fact of the matter is they're meeting on Tuesday morning in Australia, Monday night here in the US. And if the RBA is not as, let's say, not as dovish as, let's say, the RBNZ this last week, and I'll come back to that in a moment, there's a risk that the Aussie could really rally here. And if you look at other Aussie pairs, which we'll go into here in a second, the risk could be for the Aussie dollar to actually start to squeeze higher a little bit. Now, the pound Aussie, I think, is at risk of a move back towards the 200-day moving average, which is at 180. Okay, it's not too far away, especially for this particular pair, knowing that we've broken out of this range. With the uncertainty surrounding the UK and the future of what's going to happen with Brexit, and with the RBA this week, and if the RBA is indeed not as dovish as the RBNZ, like I said, the risk is down towards 180. Now, speaking of the Aussie, let's take a look at some of these Australian pairs. Now, if you take a look at let's go over to the Aussie yen, for example. The Aussie yen is range bound, and we are, in this range, and it's a very tight range, but on a dovish RBA, we could see a move below this, 78 yen level, and on a more hawkish RBA, we could see a move above the 79.50 level, and maybe back towards the 200-day moving average. If you take a look at the Australian dollar, we have a very similar type of wedge or triangle developing, and I think 70 cents is major support. Everybody knows that 70 cents, 70 cents, it's all really key support, and resistance is 71.50. We are in the middle of this, this wedge or this triangle, and that means that we could see the upper end of that range or the lower end of that range pretty easily. Now, one of the pairs that I've been focusing on a lot, and I'm going to have to go over to my charts in particular, is the Aussie New Zealand. Now, the RBNZ last week made a very big shift in their outlook, and now it looks like the RBNZ is going to be looking towards more of an easing bias. That allowed for the Australian New Zealand currency to rally quite substantially. We rallied hard, broke above the 103.70 level. If you read again our free blog on ForexAnalytix.com, you don't have to be a subscriber to get that. I talked about the Euro, or the Aussie New Zealand turning higher when we were down 103.30, and here we are at 104.30. Now you see this big trend line here. You see that big trend line that spawns back all the way from August of last year, and it comes in right around 104.50. And here, let's go over to the Aussie New Zealand. I'm going to give you a little bit different look. I did tweet this. If you follow me on Twitter, I tweeted this week. The Aussie New Zealand, the risk is if we have a less hawkish RBA, we already have a more dovish RBNZ as of last week. The Aussie New Zealand, whoops, I didn't mean to do that. Let me put that back. The Aussie New Zealand could get a significant squeeze back towards the 200-day moving average, which is the 107 level. Now, on top of that, obviously the US and China are meddling through their trade negotiations. There are some reports that came out over the weekend that President Xi is not, trusting Donald Trump's word, but we'll see. I mean, these are ongoing negotiations, and there's tactics that are involved. But if the U.S. and China come any closer to resolving this trade dispute, this trade war, whatever you want to call it, the risk is that the Aussie is going to respond better to positive trade news between the U.S. and China, more so than the New Zealand dollar, even though they're in the same region. Australia has been pounded, the Australian currency, because of this ongoing trade war. If there's any type of resolution, the Aussie should have a positive response. Then you throw on top of it, again, going back to what's happening this week, a more hawkish RBA, perhaps, definitely a more dovish RBNZ as seen last week, is a great recipe for the Aussie New Zealand to move higher. So 104.50, obviously big resistance. We get above 105, that becomes even more significant. And you have to put yourself in the what I try to do as a trader is I try to put myself in the shoes of somebody who's on the other side of the market. For example, if I'm short the Aussie New Zealand, and I've been running a core short Aussie New Zealand since last year sometime, let's just call it September, October, November timeframe. So, I'm an institutional trader. I've got a big position in the Aussie New Zealand. I've been working a big core position of, however much, it doesn't really matter. Near my cost average is maybe the near 108, 107.50 level. At this point in time, if you're on the short side and you're seeing these developments, your thought process is this, probably. Look, we get above 105, I don't want to be in the trade anymore. So think about the trade, not necessarily what do you want to do getting long, from somebody like maybe yourself or myself that's more of a predatory type of trader. We're just looking to capitalize on some reversals or key levels, versus somebody who's actually in a position and where they're, actively thinking, look, I'm short the Aussie New Zealand. It gets above 105. I don't want to be short anymore. That's where my stops are going to be. That's where I'm going to be taking profits. And that's the way I like to approach the market when I'm trading. Think about the person on the other side. Think about the persons or the institutions on the other side of the market and what they're looking to do. That helps me usually fine-tune what I'm looking for from an entry standpoint when I'm looking to take trades like this, for example. So I hope that helps you guys out. Just think about that perspective, not only what it's like to be in your shoes, but what it's like to be in their shoes as well. So the Aussie New Zealand, that's obviously something else that I'm keeping a very close eye on. I have a position on Aussie New Zealand since last week, and I'm continuing to work that core position as well. A couple other things that I want to talk about before we go over all the data that's coming out this next week. The US dollar Mexican peso, and you know, we obviously cover it here. And actually, I'm going to take a step back, and I want you guys to look at all these pairs and notice the data that the lights that you see here. So, you know, M stands for macro, C is candlestick, BT is basic technical, H is harmonic analysis, and EW is Elliott wave. So what you're looking at on ForexAnalytix is all of our analysts, you know, inputting what they see from a bias standpoint of those different types of technical analysis, and what you end up getting is these different colors. Yellow is neutral, red is bearish, and green is bullish. What you'll notice here is you've got a lot of sideways neutral action, and it's not just you have to I wanted to explain a little bit about how ForexAnalytix works. It's not necessarily the analyst that says, oh, I'm putting in a neutral bias for basic technical analysis. We're taking an algorithm of how we mark each individual chart, from a 4-hour chart to a daily chart to a weekly chart. I might mark the weekly chart as bullish, and another analyst marks the daily chart as bearish, and then, you know, between all of that and all the other charts that we've been factoring in, our algorithms will spit out this, you know, neutral, bullish, or bearish bias. Okay, so but what you'll notice is right now we're seeing a lot of mixed signals and neutral signals. You go to the US dollar Mexican peso, however, and you've got 3 green lights or 3 green indicators, which is suggesting that the US dollar Mexican peso is starting to turn more bullish. Doesn't mean you should run out and buy it, but you should probably start looking at, you know, what's making it bullish. Well, the US dollar Mexican peso, if you guys don't recall, we had a false breakdown. I think I talked about this last week. We had a false breakdown, which should lead to a bullish move this last week, which we did get. So false breakdown led to a bullish move this last week. Happened exactly like we talked about. I'm 99% sure I talked about it on the last week ahead video. We are now above the 200-day moving average. The risk here, and let me take you over to this chart. I'm going to take you over to something that I've drawn from a couple weeks back. So if you look at the US dollar Mexican peso, this longer term, you know, pennant, okay, and you'll notice we, you know, whoops, I did not want to do. Let me remove that. We had that false breakdown last week, put in a nice little hammer led to a nice bullish candle last week. Now, Donald Trump threatened at the end of the week last week on Friday to shut the Mexican borders. Now, I don't know if that's going to happen or not, if that's more just rhetoric and talk. However, Donald Trump has been known to do some pretty extreme things. If that does happen and U.S. Closes its borders to immigration, to but more importantly, like some trade to a certain extent, the risk of the US dollar Mexican peso going a lot higher in a very short order, that means in a very fast manner, is quite high. So if you happen to be running a US dollar Mexican peso short because, let's say, you're trying to capitalize on some of the, you know, carry aspect of holding pesos long versus dollars short, I think you need to start being a little bit careful here. And I think a move above 1950 and definitely 1965, I believe it is right here, or 1963, I think. Yeah, we get above those levels, you don't want to be on the short side. And I think the squeeze could be quite aggressive and quite fast. And remember, if there's news suggesting that the border is being shut down or is shut down, coming behind that move, it should happen very, very quickly, and so you just need to be careful. And if you're on the long side, I think that's what you need to be looking for. Is you got to be looking for how fast this move could actually take place. And then I think below, you know, 1920, you probably don't want to be on the long side anymore. But that's just something that, you know, obviously I'm paying very close attention to based on what had happened on Friday at the end of the session. Now, a couple of quick things. I know this video has gone on way longer than normal. A couple of quick things. So next week we do, and by the way, the China PMIs that came out on Sunday. The Sunday night, actually, it was last night as I'm filming, but it was last night, Sunday morning. It came out actually better than expected, and those PMIs are private sector PMIs, which is good. You know, that's the China PMIs came in a little bit better. Might give the market a little bit better tone coming into the open on Sunday, later on today. But we have a lot of data coming out this week. We have retail sales out of the U.S. on Monday. We have Aussie, RBA decision, as we talked about. That'll happen on whoops, sorry about that. That'll happen on I clicked the wrong thing. That will happen on Monday night in the US, Tuesday morning if you're in Australia. On Tuesday, we have durable goods orders here in the US, and you can see the calendar right here, by the way. On Wednesday, we have ADP non-farm. Remember, this is non-farm payroll week for us here in the US, and it's obviously a dollar driver, but that's going to be the ADP is going to be a big deal. Oh, I forgot to tell you, Australian retail sales are Tuesday night or Wednesday morning if you're in Australia. Also, we have the Canadian IV PMI on Thursday, and then Friday is going to be both US and Canadian employment data on Friday. So it's going to be a pretty jam-packed week. And guys, remember, we're in a pretty tight trading ranges, or we've been in pretty tight trading ranges. I do hope that the range breaks out this week. I hope volatility picks up. We all do, for those of us that are trying to stumble our way through this low volatility environment. We really hope things are going to accelerate soon. And I don't want to forget to mention, if you found this video at all helpful, useful, entertaining, please give us a thumbs up when you're on YouTube. Give us a thumbs up and subscribe to our YouTube channel. This way you don't miss any of our great interviews that we do throughout the course of the week. Remember, those are free, guys, and giving us a thumbs up really helps our team. The guys and gals that are behind the editing and publishing of this video, and for our team that works around the clock giving our guys and gals analysis. It just makes us feel better. So thanks a lot. And my name is Blake Morrow with ForexAnalytix. I hope you guys have a great trading week. I'll see you on the Face webinar tomorrow, on our free webinar, and have a great remainder of your weekend.